Welcome back to Study Hall, the show, where we try to unpack some of the denser topics out there. You know, the ones that usually make your eyes glaze over.
It's the stuff that ends up in the TLDR pile.
Exactly. But sometimes those topics are the ones that really matter, like the one we're tackling today.
Taxes.
Oh yeah, the dreaded T word. But before you tune out, trust me, this one's important. It's about a piece of legislation that landed on the calendar back in March.
It was a bit of a thud, to be honest.
Yeah, it didn't exactly make headlines, but it could have a real impact on your wallet. So buckle up, because we're diving deep into H.R. 7024.
The Tax Relief for American Families and Workers Act of 2024.
The title definitely sounds promising.
Oh yeah, who doesn't love the idea of tax relief? But as anyone who's ever stared at a tax form knows, the devil is in the details.
And let me tell you, this bill is full of details.
Okay.
It's a real doozy. We've got the actual bill itself right here, along with a stack of other documents.
And we've been poring over them, trying to make sense of it all.
Think of us as your legislative translators, turning legal jargon into plain English.
We're here to break down this beast of a bill into bite-sized pieces.
And figure out what it actually means for you, your family, and your bottom line.
So are you ready to decode H.R. 7024 with us?
All right, let's start by mapping out the territory. This bill is divided into 6 major sections,
Or titles, as they're called in legislative lingo.
each covering a different area.
Sure.
We've got family tax relief, which I'm guessing is what most folks are tuning in for.
Definitely a hot topic.
But there are also sections on business incentives, international tax stuff. There's even a whole part about Taiwan.
Don't forget disaster relief housing and changes to how taxes are administered.
It's like a legislative buffet. Something for everyone. I'm kind of intrigued by the Taiwan Connection tax treaties and international relations.
We'll get there.
But first things first, let's start with what hits closest to home. Title I, Tax Relief for Working Families.
The part where most of us perk up and pay attention.
Right. Now, this title focuses on changes to the child tax credit, which can have a real impact on families' bottom lines.
It can make a big difference, especially for those who are struggling.
So let's get specific. What exactly is changing with the child tax credit? Give us the need-to-know info.
Okay, so first off, the bill increases the per-child calculation of the refundable portion of the child tax credit.
Okay, pause right there for a second. Refundable portion. What does that mean exactly?
That's the part that can actually put money in your pocket, even if you don't owe any taxes.
So even if you're not a high-income earner, you can still benefit.
Exactly. And the increase is pretty significant. Section 101 bumps it up to $1,400 per child.
$1,400 per child. Okay, that's a decent chunk of change.
Oh, but wait, there's more. Section 102 lays out a plan to gradually increase that refundable portion even further over the next few years.
Give us the numbers. What are we talking about here?
So in 2023, you're looking at $1,800 per child. That goes up to $1,900 in 2024, and by 2025, it hits a cool $2,000 per child.
$2,000 per child. That's not too shabby, especially for families who are struggling to make ends meet.
It can really help with those everyday expenses.
And I'm guessing it doesn't stop there, does it? This is Congress we're talking about.
Yeah.
They love adding layers.
You know it. Section 103 adds another layer of protection. Inflation adjustments.
Inflation adjustments. What does that mean?
So starting in 2024, the credit amount will be adjusted annually to keep pace with rising costs.
Okay, that makes sense. Considering how inflation has been eating away at everyone's budgets lately.
Yeah, it's like a built-in safeguard.
So we've got a higher base amount and protection against inflation. What else is there?
Well, there's one more interesting tweak. Section 104 introduces a new rule for determining earned income.
A new rule. Sounds complicated.
It's actually designed to be helpful, especially for people with fluctuating incomes.
Fluctuating incomes, like people who might have a good year income-wise and then a not-so-good year.
Exactly. So under this new rule, starting in 2024, you can actually use your earned income from the previous year to calculate your child tax credit if it was higher than your current year's income.
So even if your income takes a dip, you could still potentially qualify for a larger credit based on your previous earnings.
Exactly. It's like a little safety net to help families weather those financial storms.
That's a pretty big deal for a lot of folks, especially with all the economic uncertainty these days.
It's all about providing some stability and peace of mind.
I'm impressed. And we're just getting started. Listeners, take a moment to think about what this could mean for your family's budget. Could that extra money make a difference for you? Could it help you cover some bills, save for your kids' education, or maybe just breathe a little easier? It's worth considering. But we've got a lot more ground to cover, so let's shift gears and tackle the next section.
Onward to Title II. American Innovation and Growth.
Get ready to dive into the world of business and tax incentives.
Buckle up. We're about to enter the land of R&D deductions, depreciation, and all sorts of other things that might make your eyes glaze over.
I'm already feeling a little overwhelmed,
Oh,
but I trust you to guide us through it.
don't worry. I'll break it down into plain English, I promise.
All right, let's start with something that sounds vaguely familiar. Expensing domestic research and development costs.
Ah, yes. Section 201. This one is all about encouraging businesses to invest in innovation.
Innovation.
Yeah.
That sounds good. But how does it actually work?
It allows companies to deduct those R&D costs immediately instead of spreading them out over time.
So instead of slowly chipping away at those costs, they can get a bigger tax break up front.
Exactly. It's like a shot in the arm for companies developing new technologies, creating new products, and pushing the boundaries of what's possible.
So it's not just about cutting taxes for the sake of cutting taxes. It's about strategically using tax policy to incentivize certain activities that benefit the whole economy.
That's the idea.
Interesting.
Yeah.
Okay, what else is tucked away in this treasure trove of business tax incentives?
Well, we've also got the extension of bonus depreciation in Section 203.
Bonus depreciation. Remind me what that's all about. Something about deducting the cost of assets, right?
Right. It allows businesses to deduct a larger percentage of the cost of certain assets in the year they are purchased.
So if a company buys a shiny new piece of equipment, they can write off a bigger chunk of that expense right away.
Exactly. And this is particularly beneficial for industries that rely heavily on capital investments like manufacturing, construction, or even energy.
So it's like giving those industries a little boost to help them stay competitive.
It can help free up cash flow for them to reinvest in their businesses.
Makes sense. Now, what about Section 204? That one also deals with deducting the cost of assets, right?
It does, but with a slightly different twist. This section focuses on increasing the dollar limits on what can be expensed.
So it's not just about the percentage of the deduction, but also raising the ceiling on how much can be deducted overall.
You got it. This means more businesses, particularly smaller ones, could qualify for this tax break.
So it's like expanding the pool of businesses that can take advantage of these incentives.
And potentially giving them a bit more breathing room financially.
Got it. Listeners, think about it. Do any of these business-focused changes relate to your work or your investments? Do you work in an industry that relies heavily on equipment or invests heavily in R&D? These seemingly technical details could actually have a tangible impact on your own livelihood. But we'll come back to that later. Right now, we're going global as we tackle that intriguing section on Taiwan and international tax relations. Stay tuned. We're back and ready to tackle Title III of H.R. 7024. This one's a bit of a curveball.
It definitely stands out.
It's all about Taiwan, tax relief in Taiwan. You wouldn't think those two go together, but here we are.
It's a good example of how tax policy can intersect with international relations.
Right, like who knew taxes could be so geopolitical? So let's break this down. Title III is all about preventing something called double taxation between the U.S. and Taiwan.
Double taxation. Ouch, that doesn't sound fun.
Not at all.
All
So what does that actually mean? Can you explain it to us like we're five?
right, imagine you're an American living and working in Taiwan or a Taiwanese company doing business in the U.S.
Got it.
Yeah.
So you're living your life, making money, paying your bills.
But then, bam, you get hit with a tax bill from both countries for the same income.
Talk about adding insult to injury. That's gotta hurt.
It definitely creates a financial burden and can discourage cross-border business and investment.
So this section is like a diplomatic olive branch trying to smooth things over and make it easier for people and businesses to operate across borders.
Exactly. It's about fostering stronger economic ties between the U.S. and Taiwan.
Makes sense. Now, Title III is divided into two subtitles: the United States-Taiwan Expedited Double Tax Relief Act and the United States-Taiwan Tax Agreement Authorization Act.
Two very similar sounding names for two different things.
Yeah, I'm already confused. What's the difference between these two?
Subtitle A, the Expedited Relief Act, lays out specific rules for how certain types of income earned by residents of Taiwan are taxed in the U.S.
So we're talking about things like interest, dividends, royalties.
Even wages.
Got it. So instead of getting hit with the full U.S. tax rate, these residents would get a break.
Right. They might be taxed at a lower rate or even be exempt in certain cases.
That makes sense. It's all about leveling the playing field.
And making it less financially burdensome for Taiwanese individuals and companies to do business in the U.S.
Okay, what about Subtitle B, the Authorization Act? What exactly is being authorized here?
This is where things get really interesting. Subtitle B actually empowers the president to negotiate a full-fledged tax treaty with Taiwan.
A full tax treaty. That's a pretty big deal, right?
It is. It signals a deeper level of commitment to economic cooperation between the two countries.
It's like taking things to the next level beyond just preventing double taxation.
It's about building a more formal and comprehensive framework for economic relations.
Listeners, think about this for a second. It's easy to get lost in the weeds of tax law, but this section highlights how those seemingly dry policy decisions can have ripple effects on the global stage.
It's a reminder that tax policy isn't just about numbers, it's about diplomacy and international relations.
It's about the big picture. And speaking of the big picture, let's shift gears and move on to Titles 3 and V, which address some more immediate concerns: disaster relief and affordable housing.
These sections hit closer to home for a lot of people.
They do. They deal with issues that affect individuals and communities directly, often in times of great need.
So let's start with disaster relief. Section 402 is all about extending certain rules for disaster-related personal casualty losses.
Disaster-related personal casualty losses.
Okay.
That's a mouthful. What does that actually mean for people who have been through something like a hurricane or a wildfire?
Imagine you've lost your home or personal belongings in a natural disaster. It's a devastating experience.
Absolutely heartbreaking. And financially crippling.
This section aims to provide some tax relief by extending rules that allow you to deduct those losses on your tax return.
So it's about offering a financial lifeline to people who are already struggling to rebuild their lives.
It's about trying to ease the burden a little bit.
That's good to know. Now, there's also a very specific provision in Section 404 that caught my eye. It deals with relief payments related to the East Palestine train derailment.
Ah, yes, that was such a tragic event with long-lasting consequences for the community.
It's interesting to see this very specific incident addressed within this broader bill.
It highlights how lawmakers can use tax policy to respond to very specific events and provide targeted relief where it's needed most.
It also shows how tax policy can be used to address social issues and provide support to those in need.
Right. It's not just about collecting revenue. It's about using the power of government to make a positive impact.
Now let's talk about affordable housing. Sections 501 and 502 focus on something called the low-income housing tax credit.
This is a really important tool for encouraging developers to build more affordable housing units.
So instead of just throwing money at the problem, it's about incentivizing the private sector to step up and be part of the solution.
That's the idea. It's about leveraging private investment to address a critical social need.
Makes sense. It's encouraging to see lawmakers tackling these complex issues in a multifaceted way.
It shows that they're thinking about the bigger picture and trying to address the root causes of these problems.
Listeners, take a moment to reflect on these sections. Have you ever been impacted by a natural disaster or struggled to find affordable housing? These provisions might not make headlines, but they could have a profound impact on your life and the lives of those around you.
They're a reminder that even in the dense world of tax legislation, there are stories of human resilience and the pursuit of a fairer, more just society.
But we're not done yet. We've got one more title to cover, and it's all about making sure everyone plays by the rules. Stay with us as we delve into Title 6 and explore how this bill aims to ensure fairness and accountability within our tax system.
And we're back.
All right, folks, we've made it to the final stretch, the last title of H.R. 7024. And this one's all about making sure everyone plays by the rules.
Enforcing the law.
Exactly. Title 6 is all about tax administration and eliminating fraud. So no more hiding money in offshore accounts or claiming bogus deductions, right?
Well, it's not quite that simple, but you get the idea. This section is all about strengthening tax administration and closing loopholes that allow for fraud and abuse.
Got it. So where do we start? What's the first line of defense in this fight against tax shenanigans?
Well, Section 601 focuses on information reporting.
Information reporting.
Yeah, it raises the threshold at which businesses are required to report payments to independent contractors and other payees to the IRS.
Okay, reminder for those of us who don't speak fluent tax code, what does that actually mean?
Think of all those freelancers, gig workers, self-employed folks out there. They often get paid through 1099 forms, right? Currently, businesses have to report those payments to the IRS if they exceed $600. This bill bumps that threshold up to $1,000.
So if you're a freelancer or someone who gets paid through 1099s, you might not see those payments reported to the IRS until you hit that $1,000 mark.
Interesting. What's the thinking behind that change? It's kind of a balancing act. On the one hand, it aims to reduce the paperwork burden on businesses, especially smaller ones.
Less paperwork always sounds good.
But on the other hand, it also raises concerns about potential underreporting of income.
So it's a trade-off. Simplifies things for businesses, but also creates a bigger window for potential tax avoidance.
That's right. It's a tough one for lawmakers to grapple with.
Could see that. Now, what about Section 602? That one seems to be targeting something that's been in the news a lot lately. Abuse of the COVID-related Employee Retention Credit, or ERTC.
The ERTC, yeah, there have been some pretty shady schemes popping up around those credits.
So for those who don't know, can you give us a quick rundown of what the ERTC is and how it's been abused?
Sure. So the ERTC was designed to help businesses keep employees on their payroll during the pandemic. You know, a lot of businesses were struggling, and this was meant to help them keep people employed.
A good intention.
But unfortunately, some people saw it as an opportunity to game the system. We're talking about outright fraud, with some promoters making false promises and encouraging businesses to claim credits they weren't entitled to.
Taking advantage of a crisis situation. Not cool. So how does HR 7024 aim to crack down on this ERTC abuse? What's the plan of attack?
This section throws the book at those who promote fraudulent ERTC claims. We're talking about hefty fines and even potential criminal charges in some cases.
Wow, they're not messing around. Sounds like they're sending a clear message. Don't even think about exploiting pandemic relief programs.
It's about protecting taxpayer dollars and making sure those who broke the law are held accountable.
Absolutely. Well, there you have it, folks. We've made it through the dense jungle of HR 7024. From child tax credits to Taiwan tax treaties to disaster relief, affordable housing, and cracking down on fraud. It's been quite a journey.
We've covered a lot of ground.
We have. And I hope you've learned something along the way. I know I have.
Me too. It's amazing how much tax policy touches upon so many aspects of our lives.
Right. It's not just about numbers on a spreadsheet. It's about our families, our businesses, our communities, and even our relationships with other countries.
It's about shaping the kind of society we want to live in.
So listeners, we encourage you to take what you've learned today and continue exploring these topics. Don't be afraid to dive into the details, ask questions, and make your voice heard.
Knowledge is power. And the more you know, the better equipped you are to participate in the conversation and advocate for policies that matter to you.
That's right. So stay curious, stay engaged, and stay tuned for our next deep dive on Study Hall.